Greetings, friends! This is Oleh Ivchenko, head of Pareto Company. This is a new episode of Pareto Point, a program about professional asset valuation and market events that shape their value. In today's episode, the Cabinet of Ministers of Ukraine has established unified criteria for evaluating public investment projects. The mood among global investors at the beginning of this year is more than optimistic. The global recession of 2020 and the collapse of stock markets amid the pandemic. Let's get started. The Cabinet of Ministers of Ukraine has approved a new procedure for evaluating the effectiveness of public investment projects after their completion. It defines who is responsible for preparing the final reports, the deadlines for conducting the evaluation, and the parameters by which it is carried out. The analysis includes not only the amount of expenditures, but also the economic benefits, social impact, and environmental effects. After the evaluation, an official conclusion is prepared using a standardized format. After the completion of a number of state investment projects last year, it became clear that there was no unified mechanism for evaluating their effectiveness. This became the reason for introducing a new procedure. It is expected that the new rules will increase the transparency of public investments and make it possible to promptly take into account successes or shortcomings when planning future programs. A Bank of America survey of 162 fund managers with total assets of $440 billion showed investors remain highly optimistic about the global economy, but are increasingly talking about the risk of company overvaluation. The share of cash has increased. At the same time, portfolios remain focused on stocks and commodity assets, while reducing investments in bonds. Expectations for a global boom are the highest since February 2022, and the profit growth forecast exceeds 10%. At the same time, a record share of respondents believe that companies are investing too aggressively. Among the main risks is the possible formation of a bubble in the field of artificial intelligence, which could affect market asset valuations. 6 years ago, due to quarantine restrictions, the global economy entered a recession. The first large-scale signal was the collapse of the stock markets. In February and March, leading indices lost between 20 and 30%. Within a few months, the downturn affected all developed economies of the world. The employment rate was falling at an unprecedented speed. In the United States alone, over 10 million unemployment claims were filed. The United Nations predicted the loss of nearly 200 million full-time jobs. But starting in April, a gradual recovery began, and by 2022, the gross domestic product of most major economies had returned to or surpassed pre-pandemic levels. The crisis-driven changes of the COVID era significantly affected approaches to professional valuation of businesses and financial assets on a global scale, as market prices underwent rapid shifts within just a few months, leading to a widespread reassessment of valuation models. Friends, thank you for being with us. Support this episode by liking it and sharing it with your colleagues. Leave your comments and suggestions for future topics. Subscribe to our updates on LinkedIn and read our blog on the company website. All links are in the description. See you in the next episode of Pareto Points.